Welcome back to another Stock Market Open Live. Today, we get PCE data and personal income data. We also get sentiment data. Sentiment data will come out at 7 a.m. Cali time, and then we'll be getting this PCE data actually within really the next 2 minutes. So I gotta find some, like, somebody left a comment about this yesterday. They're like, Kevin, you need like some suspense music or something, so we have something while we're waiting. And it's funny, I never do it, but I have these little tunes that we can play while we're waiting for these sorts of things. And so I don't know. Let's see. I'm gonna go to the little suspense tab here, and awaiting serious info. There's a button for that. I don't know. Let's try it. Let's see if it's any good. Okay. All right, that's like modestly stressful, so I think that one's probably okay. We got another one. Let's try this one. Let's see how stressful this one is. Ooh, that one's pretty decent. I like it. 1 minute to go. So obviously today, we got to find out if we're going to keep on over the 460 on the Qs. Pretty important line for the Qs here. Tesla's testing 225. You're right at that 225. 3-year trend line. You got 3% on Nvidia, bringing you back to 115. And what we're looking for on PCE is a month-over-month expectation of 0.1. And we're looking for the year-over-year to be 2.5. So 2.5 on the year-over-year, 0.1 on the month-over-month. Then we get core. We're looking for 0.2 and 2.5. We're now about 10-ish seconds away. So everybody, good luck. Hope whatever the heck it is you got works out for you. And here we go. So the result is personal income comes in lower than expected at 0.2 versus the 0.4 expected. And I'm waiting for PCE data. There it is. Match, 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 match. No, year over year was 0.1 high, but the first three were all matches. Personal spending comes in slightly lower. Personal income comes in slightly lower, but we have match, match, match across the board on those PCE numbers, with the exception of the year over year number just ticking up 1/10. So not pretty benign here, along expectations. It's not a low read, but it's also nothing scary. Let's listen in here.
Number change. On the spending side, pretty much nailed by economists and analysts, expecting up 0.3%, comes in up 0.3%. And I do want to point out that revisions are trickling in. Income had a strong last month, up 0.5%. It's now reduced by 1/10 to up 0.4. On the spending side, double. So we end up with up 0.3. Last month's up 0.2 moves to up 0.4. So spending doing much better here, and we have a consumption economy. But accounting for inflation, real spending comes in a little light at up 0.2. Last month upgraded from 0.3 to 0.4. Now let's look at the index. PCE, month over month, up 1/10 as expected, and that's a bit higher than the rear view mirror, which was 0. And if you have to go back and see when the last time we were a little bit higher than 0, that would be April, just a couple months ago, when it was up 0.3%. Now, if we look at the year-over-year PCE price index, up 2.5 exactly as expected, 1/10 lower than the rear view mirror, which was up 2.6. 2.5 equals January and February of this year. To find a lower number, though, you have to go into the Wayback Machine to February of 21, when it was 1.9. Now let's look at the core numbers. Start out with month over month. Expecting up 0.2%, comes in as expected. That's 1/10 warmer than our last look. Our last look was up 1/10. To find a number greater than 0.2, you have to go back a couple months to March of this year. And finally, the core PCE year over year expected up 2.5%, 1/10 hotter, 2.6, which equals the rear view mirror. But here's the good news. Even though we didn't make progress there this month, if you look at 2.6, that is the lowest level back to back, the lowest level going all the way back to March of 2021 when it was up at 2.25, okay, which is, of course, is lower, but still we've made nice progress. Here's the issue for the Fed, and it's the same issue. This is their favorite indicator because for the most part, it always seems to come in a little lighter than other indicators like CPI. However, even though we've made very good progress on the longer view runway, if you actually look at this month, and in many ways yesterday's inflation numbers and the GDP pricing index and PCE were very similar, we have had periods in the past where we have made a little bit better progress, but especially on the core year over year, at least it stayed the same and the comp goes back to the Wayback Machine. You see that yields have moved lower on this, and that really is the tell here. So the market seems to be comfortable with it. And what's fascinating is you look at 10-year right now hovering right around 422. Well, we closed yesterday at 424. We closed last Friday at 424. So whether you look at the day or whether you look at the week, we are now down 2 basis points, so really have been compressing. Longer dated treasuries are much closer where they saw the last week. You look at a 2-year right now, it's trading 441. That's down 10 basis points on the week.
Yeah, we're still about 20 basis points inverted. So you're sitting at 2.2 there on the 10-year and down now about 3.5 basis points. So this sort of data helped kind of drop that 10-year a little bit more. 2 years only down about 2.3. So you've got a little bit of a steepening in the curve there. Reaction we're getting from the market is mostly benign. I mean, here's Tesla. It's just getting rejected from 225. You've got the Qs that slightly edged down after that. Big deal. Let's go grab Nvidia. It was up 3%. Now it's up 2.8. Big deal. These are all relatively benign moves. So, no major bad news here. And I think this is relatively in line with what we expect for longer term inflation. So inflation expectations, which come out at 7, should be around 2.9. That's what we'll be looking for when inflation expectations come out from the University of Michigan. And now, let's see here. Let's see. I want to see this. There's a little piece here. The Fed can help reverse the U.S. equities curse of the third quarter. Stocks have fallen under the typical Q3 curse, though a near-term bounce appears increasingly likely with the Federal Reserve on tap to confirm easing is coming. Yeah, see, this is what everybody thinks. Everybody thinks the Fed's going to confirm we get easing, forecast by Jay Powell, and it's entirely possible. It makes sense. But I think he might save to get through the August data. And the August data, jobs data comes out 2 days later. CPI data comes out 2 weeks later. 15 days later, actually. Why not wait? So we'll see. That'll be really interesting. But yeah, that's actually an argument that I disagree with. I wonder what Nick T is saying, because maybe he can give us some leaks. Let's see if he's recently had an article or anything. I don't think he has. Nick T. No, nothing about the Fed. Let's try it differently. Okay, here we go. Top of Fed. Oh, well, yeah, his last thing. Yeah, nothing recent. Okay, it's been like 9 days. Top officials suggest Fed is closer but not ready to cut. Yeah, whatever. All right, what do we got here?
When you talk about a pullback, are you talking about the variety, garden variety of 3, 4, 5%, or you think something bigger than that?
Well, if you already look at the Qs and the Magnificent Seven, they've already had a 10% correction. S&P's had a little bit over 5%. I do think the S&P can get a 10% correction, maybe even a 12% correction. But I think it's just a correction. We've been getting these modest 3 to 5% corrections, which normally happen a few times a year. But we normally get a really good flush out of at least 10%. And I do think that we're at risk of doing that in the fall.
And you think part of that is because at this point, it's kind of a buy the rumor, sell the news. Once the Fed actually does cut rates, that'll be the time that the market says, wait a second, why are they cutting them?
Yes, I actually agree with that. I do think once we cut rates, the markets can have a temporary negative reaction. But let me tell you what I'm watching. I'm watching the 2-year Treasury yield. I do think it can get down to about 4%, 3.5%. But if we ever break that 3.5%, to me, that's going to be an early warning sign that the market's starting to price in a recession. We are starting to see data slow. We're seeing the consumer slow. We're seeing manufacturing slow. Even though we had a good GDP report, it looks like GDP could modestly be slowing. So I'm not concerned about this year, but we're going to start pricing in 2025 in terms of earnings and the economy and what the Fed is going to do. And maybe the real risk is going to be in 2025, not this year.
Steve, what do you think we should be thinking about for the Fed next week, with the chairman speaking next week, with the meeting? What does this number today kind of mean for any of that?
I mean, I expect him to talk that there is increasing confidence that the Federal Reserve can reduce interest rates. I think they're on track for a September interest rate cut. I think that the market is priced that way, and I've not heard much from the Fed that would really cause to dissuade the market from where it's currently priced. So I think there's going to be, he'll reserve judgment. There's still, for September, a bunch of data to come. I think he's going to say we're on the right track for that, but I don't think he's going to commit to it.
And Rick, the markets are set up for what next week?
Well, I think that what you want to continue to pay attention to is the dramatic moves that we've seen in yield curves, specifically 2s, 10s. It wasn't that long ago it was minus 50. It looks like it's hovering right now around minus 18. It's been as low as minus 12, minus 13 intraday several sessions ago. The dynamic that has been discussed, especially by Marianne, is true. Short maturities are going to definitely be really honing in on the potential of the economy to continue to weaken. But the big players are really looking at all trades in the context of 2 maturities. So if they're very bullish on the 2-year price going up, yield going down, they're going to be putting steepeners on. So, when the Fed starts cutting, buy rumor, sell fact, what traders are going to watch is how that distance moves between 2s and 10s. Many suspect that that will be the catalyst that pushes it back into positive territory.
Hey, Marianne, all of that, I mean, you still, even though you think there's a potential for a pullback of 10 to 12% overall from the S&P 500, you still like equities more than you like fixed income. You still like fixed income more than cash. So you wouldn't be telling people to just wait on the sidelines and jump in when you see that pullback?
Well, yes. So if you do have cash on the sidelines, if you want to lock in interest rates, now's the time to do it. So I do like fixed income intermediate part of the curve. I'm still very bullish equities, and so I'm still overweight equities, although we've taken down our weighting a little bit. But I would stay overweight between now and the end of the decade. I think this is going to be a period where we have phenomenal returns between now and the end of the decade, led by technology. Even though we're seeing these stocks correct, they're correcting because they are expensive. There is concern about when the profit will hit on AI. But we saw this during the internet process. This is a process we've seen stocks go up and down, but I think the trend stays up.
Okie dokie then. So let's take a peek. Yeah, I think the trend stays. I think that's interesting because it's like, we saw this during the .com bubble, but don't worry, This time is different. Take a look at Nick T's latest post here. We've got the core PCE index rose 0.18% in June, spot on with expectations. May was revised to 0.13 from 0.08. Pretty benign, and explains some of the increase today. So you can see the chart here. Change from a year ago is this dark blue line right here. Annualized rate over 3 months is pretty volatile. But annualized over 6 months, you can actually see this sort of bounce up as well. So that 6-month trend back up over 3%. The 3-month trend is actually about 2.3-ish. And change. And I think that's because the 6-month trend incorporates that February, March data. That was a little hotter. And so, yeah, it would. in July. We get the June data, so that's probably why the 6-month is trending up a little bit. It's incorporating that sort of hotter start of the year. Okie dokie. What else is going on over here? Well, Nvidia's rallying. It's up, 3.4 now. And Tesla's falling. Bitcoin's at 67, which is actually a nice move up from where it was yesterday. You've got Enphase just riding above the 119.88 line. It's a pretty important one. Then, what do we got? Google's at 12 bips. Pre-market on IWM, 139. It's a pretty big move there. You've got, let's see, Chipotle. You got a lot of green here. Let's see, do we have any red? Let's see here. Change. We have, pre-market. Right, there we go. Decker's up 12%. You've got Open Door up 6. Wingstop, Ubiquity 5.5. Coinbase, CleanSpark, ASML, Redfin, Upstart, Affirm, Vertiv, Nvidia, all these are up. What do we got on the downside? Oh, okay, yeah. Well, that's interesting. The only thing, I mean, three of these items are short ETFs, and one of them is Alibaba. That's all that's red. What's this in the preview? Oh, and Domino's. Okay. So you got basically 2 stocks that are red on our watch list. This is going to turn more red. And that's not to be bearish or whatever. It's just simply to say, I never see us not have at least a full page of red. And as you can see now, we don't have that. We've got literally 2 stocks on our watch list that are red right now. So there'll be some red that'll start. Usually it's just those that are up like 0.5% now end up moving down. But yeah, that'll be really interesting. So we'll get to see what happens. Let's see, how far away are we? Oh, well, we're still got some time. 45 minutes to the bell. Let's listen in over here, see if there's anything interesting.
0.2% versus the 0.1% that had been expected. You're still seeing some pretty strong gains in the markets this morning. We pulled back ever so slightly. The Dow futures now up 225 instead of 250. S&P futures now up by about 40 points versus 50 earlier, and the Nasdaq still indicated up by close to 200 points.
And former President Donald Trump scheduled to headline the Bitcoin 2024 conference down in Nashville over the weekend.
Yeah, the irony is it's not really a headline when you're speaking like the last few hours of the last day.
Who are hoping that he'd bring a lighter regulatory touch if he's reelected. And he has raised, I think, $4 million at least in crypto for his presidential campaign from the Winklevi and others. But it was only a couple years ago that he had called Bitcoin a scam against the U.S. dollar. I just went and looked up when that was, and we're going to talk about it. Our next guest is also attending Bitcoin 2024, joining us now, South Carolina Senator Tim Scott. He's the lead Republican on the Banking Committee. I remember it, Senator, and welcome. But I remember it. That was in, I think it was in June or July of 2021. Now, I'll just tell you that 2 years earlier, in July of 2019, I said a couple of things. I was talking about a $55,000 price target. I got branded a full Bitcoin maximalist in July of 2019. So I remember when he said it, I thought it was unfortunate. I think I was shaking my head, and I wish he hadn't. But he has made a transition at this point to, I don't know if he's a full Bitcoin maximalist, but he is on board. And I guess we're going to hear that on Sunday.
Saturday.
So, Joe, you just said you were a prophet. That's good to know. Here's what I can tell you without any question. You were not alone. 20,000 more people showing up at a financial conference here in Nashville is a big deal. Bitcoin's future has to be in America. What we know about the Biden administration and the SEC is they've been anti-Bitcoin, anti-digital assets. Elections have consequences. If I have the good fortune of being the chairman of the next Banking Committee, what we're going to do is make sure that innovation happens in America. That means that the regulations cannot be oppressive, and we cannot have an SEC nominee that actually wants to run it back to China or run it out of the country.
We want to talk more about Bitcoin. We also want to talk about, front and center what's happening with the election, Senator. And uncomfortably, when you can change your mind like that, like former President Trump, do we give the same opportunity to Vice President Harris, do you think? Because if Republicans pursue some of her past comments, some of them are pretty incredible, actually, like, getting rid of ICE, abolishing ICE, or abolishing private health insurance, fracking, offshore drilling. I mean, there's a lot of things. Can she now, we're talking about people are saying she's going to tack to the center. Will that be believable in your view? And is she entitled to do that just like former President Trump did with Bitcoin?
Well, Joe, if you're suggesting that Kamala Harris is down for fracking, I'd like to see that headline. If you're suggesting that she is no longer for universal health care, I'd love to see that headline. If her comments are going to be taken seriously, let's just use her most recent comments about our allies. America must be loyal to our allies, not adversarial. Her comments about Israel and calling for a ceasefire before they've won the war.
All right, I don't know. We care too much about the politics. Okay, so since they're doing politics over here, ironically, maybe that means they're not doing politics. Oh, never mind. TV commercial. What? Oh, that's quite unfortunate. Dear, somebody stole one of my remotes. Oh, no, there it is. Tried to blame the children, yet I just put it in the wrong spot. There we go. Goes right there. Oh, it's also a commercial. Well, fine then. We won't listen. All right. Well, here we go. So now we are waiting for some news or entertainment, but there doesn't seem to be much today. This is freaking boring. Powell put expectations may be set for disappointment. What's this? This week's tumble in tech stocks looks to be increasing trader conviction that the Federal Reserve will start cutting in September. Narrative is also building that Fed chair will oversee a very dovish hold next Wednesday to all but guarantee to reduce the next meeting. However, investors hoping for yet another Fed put could be disappointed. GDP showed the U.S. economy remained resilient. I mean, not a surprise. More markets enduring unexpectedly sweep swoon, maybe overestimating the potential for the latest sell-off to feed into policymakers' decision. Oh, yeah. Okay, this is boring. Boring article. Nothing new on that. Core, let's see. That's that. Okay. Boring. Who's got something entertaining? Let's try over here. 25% of auto loans are underwater. I'll see, now that's interesting. Almost 1 in 4 new vehicle purchases with a trade-in in Q2 were underwater by $6,255. Dealers are exposed to near-term discounting, and stalling auto profits may eventually feel pressure rise. Inventory gluts and higher unemployment. Ford and GM will be best positioned in 2024. Really? Oh, out of the automakers. I wonder why. I just don't give you an opinion as to why. Oh well. Okay. So what else? I don't know. Let's see here. Tesla's bobbing around. Yeah, there's nothing really special going on. Oh, the Bitcoin conference. Usually after these conferences are over, Bitcoin falls. It's not always, and it's not like a bad thing. It's just sort of like a typical buy the rumor, sell the news thing. Donald Trump speaks at 2 o'clock on Saturday, which is the last day of the event. It's kind of weird. Like, they started it on Thursday, and then they're going to Friday, Saturday, and not Sunday. So he's speaking for 30 minutes. I know they'll have Michael Saylor and Kathy, but they generally don't move markets when it comes to BTC because the market sort of already knows their opinion. What Trump says will obviously be watched heavily, but some folks are thinking, oh, buy Bitcoin going into the conference and then sell it going out. That's what some traders are arguing. I think a lot of people think that. So could be, you could end up having a little drop on Wednesday or even Sunday after the event. Who knows? It's just historically what we've seen happen. Okay, let's see what comments have here. Let's see here. Bitcoin mechanic is Bitcoin mechanic. Ooh. Yesterday's keyboard slamming was epic. What keyboard slamming? So let's see here. Okay. Get your shorts ready. Yes. Let's see. Just bought a lot of Intel, says someone here. Huh. Yeah, you're making a bet on them being able to domesticate, basically, U.S. production. Can you say that? Like, when you move production from, say, Taiwan to America, can you call that domesticating, or is that just what you do to animals? Anyway. Let's see. Get your Halo Needler ready. Yeah, I have a question about that. Wait, what? I have a debate about politics. Is the Democratic Party just giving their own person, not having a debate with everyone who wants to... Oh, well, no. I mean, really, look, I'm a big fan of having people vote for who actually runs for president. But what they're arguing is, hey, we have a representative form of government. You voted for these representatives and senators, and they've all gotten together and made the decision for you. I mean, that's technically what we have as a form of government anyway. But it feels a little shystery. I agree. So, what else here? Can we talk about ARM? Thinking shorts. Ooh. Let's see here. ARM's like 150, 160, isn't it? Yeah, look at that. 154 now. Wow. Oh, wow. Yeah, it was up at 188 there for a little minute. So, you're already down, what is that? $30? Ooh, $30. It's actually a pretty good move. What was that, like 17%? 154 is the new number divided by the old number. It's 18%. Already had a little bit of an 18% correction there on ARM. It still seems crazy to me, the valuations, but whatever. Where's Gall, who always donates money to say it's the Head and Shoulders on the Qs? All right. Yesterday you were talking about how retail is running I think you're saying running out of cash, but with all the money in money markets, could that not be considered cash waiting to be deployed? Well, I didn't come up with the research. It was BCA Research that put it together. They're not saying people don't have money. They're saying the percentage of cash that they do have compared to the market cap of stocks is at the lowest level it's ever been, which implies that even if people have more cash on the sidelines, they might be less willing to continue to throw money at the market because they've already deployed it all. All that they're willing to, right? I mean, people don't go generally 100% in stocks. You keep some money in your savings or real estate or businesses or whatever, right? So that's why they talk about investable cash versus all cash, right? Money market funds are telling you all cash availability. And they're also telling you the cash availability of companies like Microsoft or Apple, who can park their money in these money market funds, or banks who could do that. So that's why they specify households and investment organizations. And they suggest that as a percentage of equity market cap, the investable money that people have is at the lowest level we have ever seen for retail and the lowest level for institutional. That's probably because people are like, oh, look at all this money in money markets. Let's get in the stock market before that money is deployed to stocks. And really, the only thing pumping it is people's expectation that that money is going to dump into stocks. But if it's already been dumped into stocks, then that catalyst is technically already behind us. And now it actually becomes a headwind because you don't continue to have that investable push, so to speak. So, yeah, hopefully that explains that a little bit. Yeah, Nvidia's up while earnings down, just because it wasn't as bad as it's been before, and the Tesla numbers implied good things for energy stocks. Yeah, my favorite small cap out of all of this, by the way, I kind of been increased my positioning to it, has been Ubiquity. I wish they had options, honestly. Like, they've just been, they keep legging up. Now we're at another support level here at 168. We're going to 216 next. This is my favorite small cap right here. They've gone through the inventory, you know, build up. So, Kevin, do you think the rates get cut this cycle, assuming a soft landing? How far? Oh, assuming a soft landing, they probably won't go under 3. You know, 2.75 to 3.5, somewhere in there. But we're going to have a recession. Nobody knows when, but we will, and it'll drive it right back to 0. And then you'll be back at 0 for 10 years again. And you'll start going negative. The deflationary cycle that we're going to get is not going to be great for GDP. Oh, well. So, although in fairness, well, GDP is inflation adjusted. But I don't think we're going to have negative inflation anyway. Anyway, all right. Thoughts on SQQQ calls? Bullish. All credit cards emptied into Nvidia. Oh no. Oh no, no, no. Let's see what's up with DJT today. DJ Tizzle. Yeah, I mean, this is an interesting spot for it to be. That 28, I got a strong line at 28.51, and I got one at 35. It's up 1.2 in the pre-market here. Favorite long-term stock right now is probably either Apple or Amazon, you know, for the next few years at least. You know, longer term. Tesla's in there. Let's see here. Were they considering money market in their analysis? They have 20%. Well, that's my understanding. I mean, let's see here. Dude, look at this. Look at this. So you look at the chart, and you literally go down to the fine print, including money market funds. It's like the very first thing. It's actually kind of funny because probably there are a lot of people who had that question, so they wanted to address that immediately. We have already disclaimed it. Oh, I'm about to become a member and I'm super stoked. Oh, that's awesome, Austin. What's your timeline for Tesla? I mean, you just have to get through this next year. You know, that's these next few quarters are going to be very rough. Very rough. Somebody says we are in a recession and slowly getting out. This time is different because of lockdowns. After a recession, there's no new recession. Okay. I guess you haven't studied 80 and 82. So somebody says Palantir, buy. Clayton Bates. Is that like a combination of the former chairperson of the SEC and Bates Motel? Now that's a scary movie. All right. Cool. Why not put some of your money into Bitcoin because of bank failures? And you'd basically have to assume the Federal Reserve is going to collapse to think that the bank failures are going to prop up Bitcoin and everything else falls. I'd rather put my money in real estate. I like the real estate a lot. I see, maybe I'm just a little weenie, but I personally like buying a $780,000 house for $615,000. You know, putting $40K of you know, the delicious sort of floor and paint in it, and then just sitting back and going, over 100K of equity. Love it. So juicy. I like that. You know, to me, that's insulation. You know, then the market can sell off 18% or whatever, or 20% on that top number, and you're insulated. I like it. That's my insurance. Insurance, baby. And I can actually rent it out. I love it. And you should watch my long-term video. I did a short-term, medium-term, long-term video on Bitcoin. And if you watch my long-term video on Bitcoin, you'll see the biggest risk for Bitcoin is that for whatever reason, people just stop buying it. And I don't think that now people are going to stop buying it. I'm more concerned about what happens between, like, let's say between 2030 and 2040, Bitcoin is, you know, 100K or 120K or more. It's 200K, whatever it is, right? But then it's just like, it loses $10,000 in value a year, right? So it's like 2030 and you're 200K, then you're at 190, 180, 170, 160, and all of a sudden you have like this 5-year downtrend, 6, 7, 8, 9, 10-year downtrend. The desire to long-term hodl will evaporate. And because there are no underlying earnings or potentially new catalysts of new pension funds or new ETFs or new investors or new flows coming in, because, you know, people who are going to allocate have already allocated, and that's what drove the price up to, say, 200K or whatever, then unfortunately the liquidity on the sell side becomes miserable. People who start selling rapidly lead to a collapse or create a collapse in Bitcoin. And then people don't want to go back in because you've had a long-term downtrend. That is your big risk of something that unfortunately has no intrinsic value, right? That's a complete bear argument. Obviously, I'm not saying that's what's going to happen. I'm just saying that would be how I would imagine you know, a Bitcoin failure would look. That's what I think. You know, so that's, who knows. What about property outside of America? I love property outside. Like, I honestly, I want to take House Hack and buy internationally at some point in the future. You know, right now this is what we've always said since day one is we're going to focus on really good deals on the West Coast, and we're going to figure out the best thing possible for phase 2. And that's what we're doing now. But yeah, in the long term, we can do our model everywhere. Our motto is just make great effing homes, basically. That's it. We just want to help people have access to great homes, you know, make unlivable homes great or build new homes, whatever. Yeah. So, okay, what else here? Bitcoin supply too inelastic. Nah. The supply doesn't matter. That's everybody's argument for it, right? It's like, oh, but a limited supply. You don't really care. You know, Mt. Gox in Germany were a warning to this because, you know, you had a few $1 billion of selling, and the thing tanks $17,000. Like, you might have all this limited supply, but your ability to sell when other people want to sell evaporates rapidly. Like, you clean up that order book really fast, and it's not a good thing. So, like, I don't know when it'll be, but when the selling comes, it'll be rapid and scary. But again, I think that's more like, you know, a long time away. So, that's not how Bitcoin works. It's mathematically designed at minimum to 2x every 4 years. Okay. It's such a bunch of math, Kevin, the math. Okay, buddy. All right, let's listen in over here.
Healthcare, industrials, materials. financials, but we tell investors to brace themselves for higher volatility.
You know, it's interesting, Katerina, if you look month to date, you have the Russell 2000 up more than 8%, while you're seeing declines finally hit the S&P 500 and even more so on that NASDAQ 100, as you've been talking about. And the sectors that have been winning this month are very, very interest rate sensitive: real estate, financials. How much more room do those sectors in particular have to run? And when people think about this rotation, should they be thinking about it by sector or by size of firm? You know, there's a lot of divergence here on whether those small and mid caps could be safe if we saw more economic softening.
Any thoughts on putting some extra cash in the BIL ETF? This is 1 to 3 month T-bills, and it's basically cash. You know, you're probably getting like what, a 5% yield on this. I'd have to see what the trailing yield is on this, but yeah, 5.37. Yeah, I mean that's fine. You know, I think that's the same as like VUSXX, which is the Vanguard version of that Treasury money market fund. That's pretty much what money markets do. They just put your money into, you know, very short-term treasuries. That's how they get that. Yeah, like you look at, what is this? Okay, let me go to Sizzle here. And if I go to the 3-month treasury, the 3-month is yielding 5.3% right now. You know? It's pretty cool. Yes, this is always the classic, like, what's it called? Logical fallacy here. You know, people make this ad hominem attack of like, oh, Kevin just doesn't understand how it works. Okay, bitch, why don't you give me a reason? Do we wear shorts? I forgot to put shorts on today, which is a little problematic for standing up. But I mean, it's okay. It won't all fit on screen anyway, but anyway. Let's see here. I'm just really curious on your thoughts on the Dexcom dump. You know, I don't know anything about this because it's bio. You know, it's like, what isn't it? It's something with like insulin or blood testing or whatever. I don't know any of that. I don't do bio. I don't understand any of that. I'm not interested. So, yeah. So, what else? Okay, so let's see here. Let's take a look at the Qs right now. The Qs had a little bit of a candle there to the downside. That's very interesting. Yeah, we're still at about 1%, but you just had a little bit of a red candle there, a little sell pressure, and we'll see how that moves going into the day. Yeah, I think you know, we've talked about this over the last few days. You're probably in a place where it's totally fine. You're going to have bounce days. And it's one of the reasons why I've said in my last 2 videos, I think you can kind of take your time to build shorts. I think the biggest risk to being bearish right now is really next week. Because even though I don't think Jay Powell is going to tee up the September cut, he might. And Microsoft, AMD, Amazon, Meta, ARM, Qualcomm, Intel, and Apple could do really well next week. Now, I don't think they will. I think the reports will be slight beats to good news, but I think slight beats are going to get sold off like they did with Google. And if you get slight beats or matches at Microsoft, AMD, Amazon, Meta, ARM, Qualcomm, Intel, and Apple next week, and Jay Powell doesn't tee up a September cut, you're going to have a really bad August in the market. So I'm probably, the way I'm looking at it is like, you know, DCA, a hedge position. You know, if we rally today, I'll add a little bit. We rally Monday, I'll add a little bit. And then I'll see what happens Tuesday, Wednesday. You know, if by Wednesday we're getting really good data out of the earnings reports, and we're getting really good data from the Fed, and he's teeing up cuts, and everything's looking soft landing-ish, and Google was an abnormality, and and you know, positioning's normalized, volatility's normalized, well, then I'll close my shorts and never mind then, right? But I think that scenario is about 25% likely, and I think the market going down is about 75% likely. So we'll see. Yeah. All right. What else? Yeah. Oh, that's a good line. I like that. Close your shorts. It smells. That's great. Let's see here. Nashville is packed with Bitcoin attendees and so many things going on around the city with Bitcoin in mind. It's nuts. I work a block from Music City Center. It's impossible to get anywhere. Yeah. I was actually thinking about going. Like yesterday, we were looking at it, we were like, should we go? Should we go? And we're like, we could honestly cover it better from here than being there. You know, usually you go to those big events, the worst part is the reception sucks. Because there's just so many radio bands interfering with each other, it's like impossible to do anything. What would have to change to make the point about a slim order book wrong? Well, you need buyers, right? You need constant buyers. As long as you have constant buyers, you're good. The reason I say the reason I give this concern about Bitcoin, that if you have a multi-year slight downtrend, that's when you lose the buyers, right? If like the S&P 500 is going up 4%, 4%, 4%, 4%, 4% over a 5-year period, and Bitcoin's doing, you know, minus 4%, minus 4%, minus 4%, minus 4%, minus 4%, then the ability to sell people on continuing to invest in Bitcoin will collapse. And that's what destroys the order book, because now you don't have buyers. All right. So, like, in an someone at the SEC once told me, securities are sold, not bought. And if you kind of let that sink in a little bit, you'll understand what that means. And then I want you to picture Elon Musk as an excellent salesman. Anyway. So, what else? I think it's an important point Kevin just made. Build a position based on your thesis, assess and maneuver for some time. If you see the thesis' sell-off, reconfigure. Too many sink with the ship. Yeah, I think it's important for people to realize. Let me put it this way. Okay, so obviously, it should be obvious at this point, and this is not a pitch for it. I manage a fund, like a stock market fund, okay? And my target right now with that is just to minimize the vol. And so the goal is, let's increase our cash position, let's put a hedge in it, and then let's keep an allocation, like a balanced allocation to our longs. And then we can assess over the next week or two, okay, which way are we going to go? Because if we go back to the moon, we have cash we can deploy, and prices are lower now, right? So, and even if you rebuy at the same price, it doesn't matter, right? But you now have cash to deploy. If you have 25% cash, I got 25% to go shopping on buy the dips. If the market falls, the decline in the share price of the fund should be lessened by the hedges that would prop it up, right? Being short Qs or whatever. And so it's really there's sort of compressors on both sides, right? Like having more cash in a hedge limits the up, but then having more cash and hedges limits the down. And so you're trying to compress during a time, like especially now pre-election, where I'm expecting volatility to explode. If it doesn't, no problem. That's the cool thing about stocks. Okay, if the concerns are unwarranted over the next week or 2 weeks, fine, go shopping again. You know, it's portfolio management. That's all it really is. 007 dad means he has 7 children. What? So let's see here. Actually, Cactus Jack, that's not what I said. I didn't say, like, you're putting quotes on there, and now you're just lying. I'm not trying to call you a liar, but what you're doing is deceitful. Everybody can see this here, okay? I mean, you wrote it, so you're going to have to stick with it now. Okay, so you wrote, then became, quote, can't tell me anything, bitch. Oh, it's over here. That's not what I said. The quote was, someone said, Kevin just doesn't understand Bitcoin. And then I said, that's a logical fallacy. It's an ad hominem attack. Why don't you tell me why I'm wrong so I can understand? Which is actually exactly the opposite of what you just said in this quote. So your quote makes me look like a jackass, but now you look like a jackass. Okay. All right. So let's go over here.
Making here, it's a history here of execution. So what do they have to show to prove that they could turn things around?
Yeah, you know, they have a substantial amount of launches, as I mentioned. Cleanly executing on those launches this year for the second half certainly will help move the tide for them. Right?
For Ford, this guy's going to buy the dip on Ford? And to that I say, change the channel.
2017, a whole number of the provisions from the 2017 tax reform expire. So that means higher individual rates, for instance, more inheritance is subject to the death tax. It means the end to the discount for small businesses that we put into the tax reform. But that's just the expiring provisions of the 2017 reform. As you know, ideas that were once limited to the radical left, the fringe of the Democratic Party, have become more mainstream. Ideas like a wealth tax, ideas like taxing unrealized gains, much higher capital gains tax. So if there's a sweep, then it's entirely up to them. They could do whatever they like, and I'm afraid it would be a wide range of very big tax increases.
Could those tax increases be stopped if the Republicans keep...
Now you have sort of like the fear-mongering of like, well, if the Democrats win, they're going to raise taxes. I mean, they probably will.
These new tax increases that the Democrats would like to inflict on our economy can be blocked if Republicans have either house of Congress or, of course, the White House. The Democrats would need a sweep to enact their most ambitious tax increases. However, the provisions of the 2017 tax reform that expire, that's going to require affirmative legislation to extend those. And so if there's divided government, there'll be a negotiation over which things get extended and under what circumstances. So we're in for a potentially dicey situation.
Yeah, we're in for a bumpy ride. We consider ourselves warned by you. Thank you very much, sir. One last one. Harris is reportedly considering Pennsylvania Governor Josh Shapiro as a running mate. If that were to happen, would that ensure Pennsylvania goes for Harris?
No, it certainly would not ensure that at all. It might marginally improve her chances in Pennsylvania, but, you know, people are usually voting for the top of the ticket, not the vice president. I think the more important question is whether or not Kamala Harris decides to sort of moderate her image by selecting someone who's from the sort of mainstream of the Democratic Party as opposed to the...
Is that possible? I'm just kidding. Of course it is. Take a look at this. This is an interesting chart. This chart here shows stocks as a percentage of financial assets minus households and personal trust. So it's basically, they call it household stock allocation. And they indicate that household stock allocation is at the highest level it has ever been since this chart was created back, 1950 or whatever. That's crazy. Wow, look how low stock allocation got over here in the 80s. People are like, buy stock market, I'm done. No thanks. And post-COVID really solidified the new highs, huh? That's crazy. But yeah, it's getting a little extended again over here. Look at that 08. How short term that allocation got low over here. That's very interesting. All right. So let's see here. Let's go. Oh, that's boring. Okay. Well, the Qs are still holding on to 1%. Tesla's holding on to 1.5%. Enphase is holding on to 2%. BTC is at 67.3%. Still sitting at about 3% here on Nvidia. I don't know what's going to happen today, but it's going to be entertaining. I think entertainment's guaranteed. Yes. Love the 007 shirt. This is a vest. Yes, thank you. So I was trying to get Lauren to watch Bond, but she refuses to watch Bond. So we watched Ocean's 11 instead. Now we started Ocean's 12, but we did not finish watching that yesterday. So what else? I don't know. Let's see here. Let's see. There's got to be some news somewhere. Nope. This is an interesting one. I mean, this is a zero hedge chart. Earnings growth outlook. They're basically like, charts like this have not ended well in the past. And so the argument here is S&P earnings growth outlook. So what expectation do people have for earnings growth? And they give these different examples here. Oh, it's the new economy, the internet economy, Great Recession, secular stagnation, COVID, bear scare, the 2022, and then of course the AI narrative. It's crazy. Oops. I guess I must have hit the lock button there. Hey, unlock again, will ya? There we go. All right. What else? I don't know. There's limited news today. I've seen much too juicy. I guess we can look at maybe one of those earnings reports from yesterday, although even that wasn't that entertaining yesterday. With the exception of Dexcom, which was down like 30%. What about this morning? Do we have anything this morning? Let's see. Colgate. Oh, Colgate and 3M. I guess we can look at those. Let's see how they did. All right. So let's do it. Colgate. Palmolive. Ooh. Okay. Let us find out. Okay, Colgate, adjusted EPS 91 cents versus 87 cents. Sales beat a little, 5.06 billion versus 5.01. They see fiscal year net sales up 2 to 5%. See commodity costs increasing sequentially in the second half, quarter to quarter. Colgate rises on exceptional sales. Oh, no, well, that's pretty good. Let's see here. Okay, what about... What was the other one I said? 3M. Yeah, it's always an interesting one. George Clooney, Matt Damon, Brad Pitt. Don't blame her for wanting to watch Ocean's 11. Fair. Totally fair. All right, 3M comes in with net sales of $6.26 billion, which is higher than the expectations of $584. Fiscal year adjusted EPS forecast $7.15 at the midpoint, whereas the prior midpoint was $7.05, so about a 10-cent raise there. That's pretty good. It's also pretty good. Huh? All right. Decent. Some people are talking about a decline in gamma. Usually just sort of indicates a pause to the momentum, up or down. So like a consolidation phase, maybe. That doesn't surprise me leading into next week. That's why I've been saying sort of like Thursday, Friday, maybe you get a bounce, maybe even Monday. But the real poop, either the poop or the rocket ships hit Tuesday, Wednesday, Thursday of next week. That's going to be the really entertaining time frame, which is also the time frame the coupon code on the courses on building your wealth expires July 31st. I mean, it's the end of the month. It just happens to align with a lot of economic catalysts. Tesla people, oh, come on, Tesla, get it up, would you? Well, here are your lines at play. 221. Oh, it doesn't even want to stop there. What's going on? Is there Tesla news? I don't think there is. Oh, we're about to hit the bell. Oh, dear. How did that sneak up on me? I don't know. Oh, well. Well, whatever happens, good luck today. You deserve good luck. I appreciate you hanging out with me. We'll see what happens together. That was a little loud. Alright. Tesla going into the opening with only a 35 basis point increase. It was up as much as 2% earlier. I don't see any news on it. Qs are holding on to their 1%, and Enphase is holding on to its 2%, and Nvidia is holding on to its 3.5%, and it's rallying into the open. Let's hit the bell.
The huge opportunity for simplification of this company, whether through transactions or something else, and only 50% of the street has a buy rating on it. A lot of people left to be convinced.
But I feel like it's not really that. This is more of a self-help execution story now.
We got a lot of movers we're going to get to. Let's tell you who did the honors here. That was the opening bell, of course. Take a look at the real-time exchange. As you might expect, given futures, a lot of green on that board. Here at the big board, Supergroup, Betway, and Manchester City announcing Betway's deal to become the official betting partner.
Wow, that is English so green. But as we saw, usually that tends to redden up throughout the day. Okay, let's see if Nvidia can hold on to its 3%. Bitcoin's going bullish. Okay, but Bitcoin wants to pump. Qs are coming down a little bit. The Qs are do's. Tesla's coming down a bit. Nvidia's coming down a little bit. That's all the crazy moves in the market. Okay. Enphase is dropping. Tesla's about to go red.
Lost the lead.
Tesla went red. And Qs are dumping a little bit. This is not that entertaining. All right. Is Jimbo on today?
Again, actually, I'm seeing 400,000 negative. Street was at 257,000. I'm looking at a Wells Fargo report. Unpredictability, though, of this affordable connectivity program is the key. We've talked about it a lot. Remember, it expired. It was helping people pay both their broadband bills or their wireless bills. You heard it figure into Verizon's numbers. It's figured into the Comcast numbers as well, not as much for AT&T. Here, Chris Winfrey, the CEO of Charter, discussed the impact of the ACP during the conference call. Take a listen.
During the second quarter, we lost 149,000 internet customers, most of which was driven by the end of the Affordable Connectivity Program. We've retained the vast majority of ACP customers so far. The real question is customers' ability to pay. not just now, but over time. I expect we'll have a better view of the total ACP impact once we're inside the fourth quarter. The lack of ACP will also drive higher levels of market churn and selling opportunities for connectivity services over time.
So any number of these companies working through sort of the questions around this important program that helped obviously to enhance the roles of customers, many of whom they're trying to keep, but affordability, obviously, Sarah, continues to be a question for some of these people on the lower end of the income scale.
It's like a theme we've heard across the earnings spectrum and consumer companies especially. The only stock doing better in the S&P right now than Charter is Deckers Outdoor Corporation. So this is the parent company of Hoka, and that's the story of the strength in this stock and in this earnings performance. Decker reaffirming its fiscal 25 revenue, but beating on the top and bottom lines in a big way. The Hoka revenue up 20% from last year. UGG was up mid-single digits as well. And they raised their earnings outlook. I mean, clearly there's a lot of excitement, and the global expansion around Hoka in particular is really taking hold. And investors have been excited. It's not like, I mean, the stock is up 70-something% over the last 12 months and is going to be up another, I don't know, 13%.
You see that peak there? That was June.
Yeah.
That was the peak in all momentum factor beneficiaries. And so they had this huge surge. It's a category killer within consumer. It looks a lot like Chipotle and a few other anointed names. So you had this huge unwind of that trade. And now they got the fundamentals come in and say, actually, the story hasn't really weakened at all. It's just about the kind of valuation and sort of the relative positioning of
Which
the stock.
shows it hasn't been fundamentally based on some of these stocks.
Right. So maybe the upside was exaggerated in the momentum surge, and now, you know, the sell-off overdone absolutely since the last, month.
They're given reason to buy. They're talking up some new innovation and rollouts, including the Bondi line of Hoka. And it really does stand in stark contrast to stock performance of Nike lately, of Lululemon lately. And I know Lulu is less in the sneaker business, but when you hear Nike talk about softer sales and read about the market share declines, and then look at a quarter like a Hoka. And also we talked to New Balance this week. It's a private company, but they've doubled their business in the last few years. You see where those shares gains are going.
You could definitely argue that Deckers, though, has become a lot more kind of hit-driven. So it's sort of like as long as that remains the hot brand, because it is now, 28 times earnings, used to be kind of a 15 times, more slow and steady. So obviously changes the equation there a little bit.
They're getting full price.
I want to get to the blow-up of the day, and we've had a number of them this week. Yesterday, Edwards Life Sciences, our viewers may recall, losing, about over a quarter of its market value. Today is much worse, and it's another large company from a market cap perspective, or at least it was at the beginning of the morning, and I'm talking here about Dexcom. Had been a $42, almost $43 billion market value, a lot less now. Look at that loss as the company both reports a top-line miss for its second quarter.
40% now.
Number, and it also reset guidance dramatically, driven by what they're calling three main factors: a sales force realignment, rebate timing having been accelerated, and as well sort of some issues in terms of patients and the channel and things of that nature, all of which is simply to say that this thing is not getting the growth, fewer customers. By the way, I haven't explained glucose monitoring systems is what we're talking about here. Mike, I mean, we see these, and we have actually a few times this week seen dramatic sell-offs in some names that really, when they miss the top line, it's over.
In the growth part of healthcare, in these areas within healthcare that are seen to have these massive demographic headwinds and great unit economics and all the rest of it. So obviously not a lot of patience for that story. Now, are they talking about the diabetes drugs at this point? I mean, obviously, it's got to be the first thing people think about.
Is it the GLP-1s really that are affecting it or not? I saw Jim Cramer, who, of course, is off, but doesn't mean he's away, talking about he thinks maybe Abbott is taking market share in some fashion, even though there are some analysts who are defending, saying it's not a market share question. I think investors at this point are saying, well, I'm going to sell now. We'll ask the questions later.
I mean, it also comes down to, have they already maximized in a short-term basis in terms of their penetration? If you get to be a growth company and you have to hit your numbers, there's always these little pull forwards, and you have a hiccup and a couple of things in a quarter, and this is what happens to a growth stock valued that way. We got to see the follow through in Alphabet today. It's continuing.
Let's see then. All right, so let's see what's going on. Let's take a little updated look here. So it looks like Tesla has sort of hit a bottom here, 218. If you're looking at calls and think this one's going to run, I think 225 is where you go. You don't really have a great support under this other than where it paused yesterday. So you can kind of look at Tesla yesterday and go, okay, maybe is it a 217 bouncer for Tesla? Maybe. So watch Tesla. Then you've got, let's get off the averaged here. Let's go non-average. There we go. That's a little easier. So watch Tesla at 217. Nvidia's sort of bobbing a little bit. We'll see if that can end up holding up. Same thing with the Qs over here, trying to bob up. I think a lot of today is you know, there could definitely be some good buy the dipping today. You know, I don't think it's you know, you're looking for a collapse like you saw in the last 2 days. But I think that sets up more for next week. Look at that nice move here on BTC. I mean, a nice little candle up here, about a $300 candle up, so really good. And Enphase gave up its 2% on the upside. You've got Google that's holding on to, bottomed out there about 1.5. You got Ubiquity that's holding on to still about 2%. CrowdStrike's coming up. I know some people have been wanting to buy the dip on that one. Open Door, I mean, that one moves like 6% up or down a day, it feels like. SOX is slowly moving up. The option spreads on this one are really nasty. So it's something to know. I mean, if things are rapidly moving, it could be fine. Interesting. TNA's dropping a bit here. That could mean you're getting the Russell selling off a little bit after its run, because it had a nice pre-market run. Oh yeah, and even had at the bell run here. So we'll see the direction this ends up moving. Then looks like we got, yeah, Nvidia's trying to really keep it on here. We'll see if we end up getting you know, a rally mode today or what we end up getting. But it doesn't look like you've got any kind of major bearishness happening today. So you know, I personally wouldn't be going 0-day puts right now. But you know, I think you're in a place where maybe there's potential to, as we've been saying, you slowly kind of DCA into some short positions if you are worried about next week. If you're not, then don't worry about it. Just keep buying the dip and go long. So UPS, it looks like they're pushing up a bit after their gap down. Look at that nasty gap down. It's a lot more obvious when you go to the average candlesticks. Jeez. Amazon back at 181. It really just couldn't get through $200. I mean, it briefly went to 201. It just couldn't hold it up. And you got AMD today. Also barcoding, kind of moving sideways. Seems like there's not as much enthusiasm as maybe there should be to keep that energy moving. Okay, let's I want to take a look at the yield curve again now that the market is open. So let's see here. Bonds. Okay, wow, the 10-year's down 6 basis points. What's the 2-year down? 2 years down. 2-year. Come on, baby. Come on, baby. Oh, it's down 6.6 basis points. Good. That's a little bit of a steepening. That's cool. Very, very cool. It's too cold in here. I'm not wearing my shorts. That's the problem. Or is it? Okay, so... Oh, anyway. We'll see. AI trade degrossing, IWM catching up. Yeah, make sure you watch my video yesterday that I gave about the IWM. I think that going to IWM, I personally think is picking up a stick of dynamite that looks like a bar of gold. And it's just gonna blow up in your face. Yeah. Oh, you pick up 0 days 3 hours before the close? Oh, that's ballsy. 10? They probably get pretty cheap around then. Well, you probably pick up, what, the penny ones? You know, I mean, it makes sense. You try to pick up, you know, a 1 or 2 penny one, and maybe it makes a move into the close, right? Yeah, I can see that. So... Anyone buying a Tesla, you're going to get wrecked on your equity. Nobody wants them, your equity will be gone. I mean, I didn't buy a Tesla for the equity. I bought it because I didn't want to drive. Yeah, Patrick, thanks for joining the stocks course. You just have to watch lecture 1.0. And then there's a little thing you fill out there in 1.0 and then give it about 10 minutes and it'll automatically set you up. So if you do it now, log in, watch lecture 1.0, you'll be in for the course live, which we'll be doing in, I don't know, 30 minutes or so. Kevin, is money flows it out AI? It's got to go somewhere. Why not to crap that hasn't gone up all year? Well, because technically what you're saying isn't exactly true. It's partially true, okay? When people sell a stock, yes, they get the residual cash, which they can then put somewhere else. But sometimes, like, the way you have to look at it is like, I'm going to make an extreme example here, okay? Let's say House Hack is $1 million a share. I'm just saying, okay? Let's say it's $1 million a share. And everyone watching right now, all 11,900 of you own, $1 million, $1 million share. So everybody's a millionaire because of House Hack, yeah. Okay, so everybody owns one share. And then one of you all sells that $1 million share for $100,000. Technically, your Weeble charts or whatever would say all of y'all just had your $1 million share go down to $100,000. And unless there were buyers who were like, oh, you're going to buy the dip back up to $1 million, everybody just lost $900,000 of money that went nowhere. That one person who sold took their cash for $100,000. They took their cash and they're able to put it somewhere else. But everybody else lost a lot of net worth. Just like that. Because somebody else was selling. So that cash didn't go anywhere. Like, nobody did anything with that cash. It's just the value went down. So what actually happens when valuations change in the stock market is you actually create money or you destroy money. So when the market collapses, you're not necessarily moving money somewhere. You're literally just taking money and making it disappear. When the market goes up, you're basically printing money out of thin air. So that's something to know that's very interesting about the stock market. And it's actually something that makes markets, frankly, fragile because money can get created and money can just disappear. And that means when you have a market fall, that new money doesn't have to go anywhere, or that money doesn't have to go anywhere that it seems like disappeared because it did disappear. Anyway, hopefully that analogy helps.
Ford is down 20% this week. And the big miss there, the warranty expenses, worse than thought. Jim Cramer had a real mea culpa on the show last night. I wanted to see what he said about Ford because he had liked it and said that he was wrong because the warranty was a bigger deal than he was led on to believe from the CEO, Farley.
Seeing no rebound thus far in shares of Ford. To your point, I mean, GM's up. Tesla's having its worst week since April. Again,
Stellantis
all of these on earnings.
Stellantis got hit.
Tesla's actually running again. It's trying to get to 221 right now. I know they're bagging on it right now, but if you're looking for calls, it looks like it. Look at that. What did I say? I said 117 looks like it's your support. I don't even have a line there. I just looked at yesterday. I'm like probably around 117. And look at that. 216.77. Now, the question is it going to hold that? I'm too bearish. I'm not going to buy calls. I'm way too freaking bearish on this stuff. I'm just a bear right now, okay? I'm sorry. I change my mind. When the market changes, I change. So, no Tesla puts. I don't have any Tesla puts right now. No shorts on Tesla. I have different shorts going right now. I added a few shorts this morning as the bell opened, and I sent that alert to everybody in the Stocks and Psych group. But no, it's actually not Tesla. Those options right now are up 3% and 11%. Now 4% and 11.5%. But that, you know, you don't want to stare at that because it bobs around like crazy all the time. So, oh boy, it's not always like that either. I don't have any losses set for him either, like stop losses. I mean, it's a decent sized position. It's 100K. I should have stop losses, but I've honestly stopped using stop losses a lot. I'll use it for when I want to take a profit. You know, like when I'm green. But like I'll buy a position and it'll just immediately like go red for the first few minutes or whatever, and I'm like, no problem. I'm willing to DCA on it or whatever. Like you have to kind of have that. If you have a thesis, you kind of have to stick to it with trading. Otherwise, you're just gonna get wrecked. You know, you go in and out because of the 1 minute candles. You're just gonna get destroyed. Oh, look at that Q's bounce right there. That's really interesting. Right there on 460. All right, let's listen in over here. Now remember, I send all that stuff to everybody in the Stocks and Psych group, which what's weird about that is because there's no monthly subscription, you get lifetime access forever. You know, I could be like, I'm 32 now, I could be 52, and you could still be getting trade alerts from me from something you paid for 20 years ago. It's been true for people who joined the courses back in 2017, you know? So it's kind of cool. But I'm a big fan of that. I don't like the recurring model. I mean, I would love it from a profit point of view, but I'm just more like diametrically opposed to it. So. Oh, they're all just gonna go on commercial now. Okay, y'all freaking weenies, you know, little weenie babies. Commercial. Yeah, we're gonna go on a commercial break. Yeah, a commercial. Everybody needs to get their ad in. Yeah. Come on. Give me some TV, man. You just want to watch? Oh my god. All of them are on commercial. Losers. Fine. Get to stare at me. So, yeah. Well, now what? I think what's next is oh, the Qs are down. They're still up 46 basis points. If the Qs keep going, then they might. Wow. Yeah, they're only up 45 basis points now. Nvidia is kind of tanking right now. It's still up 1% on the day, though. Tesla is sitting at 80 basis points to the downside. It's going back to test that 117. And then you've got, what's it called here? You have the Qs are at about 48. Looks like Bitcoin 67.5. And Enphase is sitting at about 1%. It was up about 2 for a while there. It's right under that 119 line, which is a pretty big line, pretty important line. Q's 56-ish. ARM 1.3. You know, I wanted to short that when it was at like 4% up. I'm like, oh yeah, okay. I didn't end up doing it. That 1.2. Yeah, ARM's an interesting one just because I think the valuation is very rich and the cash flow's not that great. That's always been a thesis of mine, but you know, no guarantees, obviously. So, what else? Then you've got DJT's down 1%. That's interesting too because that was up 1% or so. All right. Alright, whatever. So, just gonna see, there's gotta be some news somewhere. Let's see here. Let me look at the two. Oh, you know what? I'm gonna look at the world interest rate probability again. World interest rate probability. And let's go with... Okay, here we go. So September's pricing in 1.13 now. 1.8, November 2.76, almost 3. Yeah, you're almost pricing in 3 cuts for December. I think that's interesting too. Ooh, Tesla just came back. It's at 220 now. And it just broke 0. And then if I go out to January, January, I'm at 3.465. Q's just bounced a little bit in the 60s. So that's the world interest rate probability. What about the 210? 210 function. Where do we sit? And then we'll go over here. 210's right now, negative 18.7. Interesting. All right, let's see what they got.
Well, we're also going to hear from RFK Jr., Stuart, and I got to say, we're going to hear a lot of friendly crypto messaging, and we've got a lot of open minds amongst attendees. Former President Trump, he's expected to announce Bitcoin as a strategic reserve asset, his plan for that. He's also planning to emphasize his commitment to transactional freedom, and I can tell you from folks I'm talking to, that message is resonating. I mean, this conference, it was already a huge deal in the industry, but people are excited that crypto is finally being taken seriously. We spoke with ARK Invest founder Cathie Wood, and she says the community welcomes Trump's outreach with open arms.
I think the more he learns about it, the more he commits to it and is therefore going to learn about it, the more he's going to like it and become strongly in favor of it. I would like to see the government step out of the way and stay out of the way.
And it's no surprise why candidates like Trump and RFK Jr. are set to make their pitch to the community this weekend. It could really tip the scales come November, especially in swing states. So take a look at some of these numbers. The Stand with Crypto PAC, they've been signing up advocates in key states like Georgia. They already have more than triple the vote differential in 2020's presidential race. Now, one candidate, Stuart, that is notably absent here this weekend, Vice President Harris. The conference invited her to speak out of fairness, but she declined that invite. And folks here said it could have been a good opportunity to distance herself from what critics call was an all-out war on crypto by the Biden administration. Instead, she's not showing up, and they're going to hear a very crypto-friendly message from former President Trump tomorrow, Stuart.
No, I'm not surprised about that. Kelly, thanks very much indeed. Lydia, real fast question, do you think Trump picks up votes because of the crypto people?
You know, I think voters are smart, and they might remember he was a crypto Bitcoin skeptic, so he might have to explain what's changed his mind. But I think he's smart for doing this.
I think so. There are votes available for crypto people to support them. All right, thanks, Lydia. Check those markets, please. We've got the Dow now up 546 points, NASDAQ up 92. Let me say thank you very much for joining us for that. Much obliged to you. All right, still ahead, Todd Pyro on the Obamas' delayed endorsement of Kamala Harris. General Jack Keane will take us through the military threat from China and Russia. Dr. Mark Siegel reacts to Biden's doctor, claiming the president has, quote, excellent mental acuity. And I'll ask Steve Hilton what California would look like under a President Kamala.
Forgot the music's playing. I'm going to get in trouble now. Okay, so what else?
Guest on a lot of different media. A lot of different networks, of course, including our own. A federal grand jury in the Central District of California returned an indictment charging him with multiple counts of securities fraud for what they call a long-running market manipulation scheme that reaped profits of at least $6 million. That's the DOJ's press release I'm reading of. I mention that because you go to jail when the DOJ comes after you. It's not just the SEC, which is also involved here, which is civil. DOJ is criminal. Here's something from the press release. Alleging left commented on publicly traded companies, asserting market incorrectly valued a company stock, advocated the current price too high or too low, routinely included sensationalized headlines, exaggerated language, maximized reaction, and then knowingly exploited his ability to move stock prices, targeted stocks that were popular retail, posted recommendations.
Wow.
And really, Mike, we didn't get to the heart of it, which is, and then, of course, often did things that were contrary to what he was saying he was doing.
That's always the key. You mischaracterize your own interest and then convey anything that's deemed to be misleading or deceptive or knowingly wrong. That's where you get into trouble. It's not just expressing an opinion on a stock that you own or short or whatever. Right. It's that contradiction and potential for misleading investors.
False representations are the key here. 25 years is the maximum penalty in jail. Coming up in the next hour, the head of antitrust for the DOJ, very different area for the DOJ, Attorney General Jonathan Kanter, talking the regulatory picture ahead.
Look at that. Federal prosecutors have criminally charged the activist short seller Andrew Leff with securities fraud related to allegedly using his public platform to illegally profit to the tune of $16 million for manipulating stock market activity contrary to positions he presented to the public through 18 to 23. Yeah, I mean, that's dirty. Like, you know, Bill Ackman, you know, he'll be like he won't lie about his positions, right? If asked about them. So like, oh, I'm going short bonds or I'm going long bonds or whatever. As long as you actually do that, that's okay. But what really pisses the SEC off is if you're like, oh yeah, I'm long GameStop or whatever, and then you're shorting it. That's bad. Because then you're lying. That's not good. $20 million multi-year scheme to defraud followers by publishing false and misleading statements. Wow. 23 companies, 26 separate occasions. Wow. Let's see here. Left bragged to colleagues that some of these statements he made were especially effective at inducing retail investors to trade based on his recommendations. That it was like taking candy from a baby. Wow. That's pretty scummy. These companies identified as ones left traded on in ways contrary to his public stances include Nvidia, Tesla, Twitter, Meta, Roku, Beyond Meat, American Airlines, Palantir, GE, and Invitae. Wow. Left coordinated with hedge funds to disseminate short reports and information to be posted on Twitter. Coordinated with hedge funds regarding the timing of publications and enabled the hedge funds to trade in targeted securities before the reports were disseminated. Wow. That's scummy. In exchange for sharing his planned announcements with hedge funds in advance, the hedge funds paid Left a portion of their trading profits. Oh, Boca Raton. It's a Floridian. Wow. I want to see the actual complaint. Federal prosecutors. Oh, here it is. Indictment. Ooh, I love these. Ooh. Then a resident of Beverly Hills. Frequent guest and commenter on CNBC, Bloomberg TV. Whoa. Oh, okay. I want to see, like, the actual claims. Oh, okay. Yeah, here's an example. Let's look at an example. On or about August 30th at approximately 10:07 a.m., defendant Left posted on the Citron Twitter account. Oh, no, I remember this guy. Oh, wow. Okay, here we go. Including the link to a Citron short report with the headline, Cron, the dark side of the cannabis space, and a tweet stating, Cron target $3.50. Everything that is contaminated about the cannabis space. All hype with possible securities fraud. At the same time of the tweet, Cron was trading for $11.50 per share. About an hour later, he posted again, promoting a short position on Cron, that Andrew Left from Citron on CNBC Fast Money to discuss why Cron is the most overhyped of all the pot stocks with a price target of $3.50. Defendant Left placed orders to begin closing out his short position 24 minutes after posting the first tweet. Wow. By the close of the trading day, defendant Left had a net short exposure of approximately 348,900 shares, a reduction of approximately 61%. Later on August 30th, after the close of the market, defendant Left appeared on CNBC's Fast Money to defend his characterization of them as a fraud. During the telecast, defendant was asked directly twice about his own position in Cron. The host followed up then and asked, this is probably Jim Cramer, are you just as short the stock right now as you were at the beginning of the day? Wow. Defendant left falsely stated that he only covered a small size of his short position earlier in the day, when in fact the defendant left then knew at the time of his appearance that he had already closed more than 60%. Oh, Michigan's out. Hold on, let's get the Michigan sentiment.
Now, these are July final reads on University of Michigan sentiment, so they will replace the mid-month read. Mid-month read on the headline sentiment figure was 66.0. It moves up to 66.4, but remains the weakest level of sentiment.
Okay, sentiment missed by 0.1. Current conditions missed by 2 points. What is that? 1.7 points. Expectations actually came in better than expected by 1.3 points. 1-year inflation 2.9, 5 to 10-year inflation 3. Both the expectations there were 2.9. So pretty benign, honestly. I mean, that's fine. I don't think there's any issue there. End phase moved back up. Tesla's just really having trouble with that 220 area. The Qs have ticked up a little bit. Nvidia's kind of been bobbing around. Honestly, there's kind of a lack of momentum right now is what it feels like. It feels like a very kind of quiet day, benign day. Frankly, IWM's moving up nicely. I still think it's a stick of dynamite. I mean, nothing changes my opinion there. I do think there's a chance it goes up to, I think it's 236. Yeah, the 236 line is possible for a nice rejection. And I think that would align nicely with, what we think might happen next week. So, BTC's been bullish this morning. Somebody says Meta's running. Yeah, I think if, it's not so much the recession, I just think if the Qs roll over before the election, small caps will move right down with them. Yeah. That's my take. It's laughable how masses are moving to small, unprofitable companies. Yeah, I mean, look, there are some small companies that are good companies and profitable. Like, I think Ubiquiti is a great example of one. I think they're a phenomenal company. They don't have any options chain liquidity, though, so I was a little bummed about that. Whatever. All right, so I want to get another example. Oh, here's a Tesla one with Andrew Left. Left's E-Trade. Defendant Left purchased short-dated call options representing more than approximately 235,000 shares of Tesla stock that expired the day later. They traded 0 days, bro. That's funny. Okay. All right, so we got some 0 days trading. And on the next day, the defendant posted promoting his long position. Tesla dropping earnings on top of Ford tomorrow might be bad sign for shorts. After reviewing all recent info on Tesla dominating its categories, Citron is long Tesla for this quarter. Uh-oh. Yeah, well, I mean, he has a one-day position. I mean, it's like, if you say, like, I'm going calls for tomorrow, it's not manipulative, right? If you're like, oh, I'm going to go long tomorrow, and then you're long tomorrow, hey, that's fine. So, defendant Left also included link to Citron report. At the time, Tesla stock was trading for 266. Within 1 minute of announcing Citron is long, they placed an order to sell call options. Oh my gosh, more than half of his pre-tweet position for a profit of at least $1 million within 1 minute. So he literally just took one candlestick. One candlestick on the one day after his tweet. That's dirty. Oh, look at the Qs just dumped, by the way. Oh, that's interesting. Oh, Nvidia just dumped down, too. Oh, here comes the momentum, baby, and it's to the downside. Holy smoke-a-jokas. What just happened here? This is very, very interesting. Okay, all right. Oh, can we get the Qs bounce? Come on, baby. Come on, baby, light my fire. You can set that world on fire. Okay. No, right now, the only short I have is actually the Qs, and I don't think it's up that much. I have, because I closed my other position. It's up like 3% right now. It's a nominal move right now. I closed my other ones for a slight profit. But, yeah, okay, interesting. Little bearishness just came in there from Enphase, man. It's going to 130. Good for Enphase. If you get a bullish week next week, it's going to be really bullish for Enphase too, because you're going to clear some of the, the bearishness. Anyway, okay, so let's keep going here. By the close of the next trading day, on or about October 24th, defendant sold approximately 81% of his pre-tweet position for a profit of $6 million on the next trading day. Okay, can it just stay green, please? Like, I don't like this orange color. On the next trade. I mean, in fairness, it was a one-day position, but then again, he said he was going to be long for the quarter. So, challenges in... okay. We actively manage... okay, whatever. I mean, that's... oh, the Qs just rolled. Oh, they just rolled. Oh, they broke the line. No! No! It's very bad. That's very bad. That's very bad. Okay. I wonder if we can bounce here. Yeah. Wow. Tesla now down 1.23. Nvidia. Yeah, the one candle green, and then you get the big red. Somebody says Amazon still. Wasn't a one-day position, it was 3. Oh, really? Expired, 3 days later. Oh, you're right. Yeah, I misread that. My bad. Okay. Wow. Yeah, you're getting this bearishness coming back, eh? So, very interesting. I don't know if it'll hold, but I was really, we had a bounce today. I wasn't expecting it to all of a sudden go dirty this badly. I mean, I was short, but I already closed some of them. Now I just have SQQQ calls, which is technically a short position, right? But, yeah, losing the 460, it's going to put us back in the 450 range. Tesla's the one that's just getting whacked. Ay, look at that. It's not ideal. Tesla's got the momentum down. And it just lost 217. Oof. See, and Tesla earnings are behind it. That might be a more interesting like, I don't know that you could. Can you really go short for the near term here? I don't know. It's a little harder. And the volatility pricing is still pretty up there. All right, there's your Qs. Yeah. No, I haven't done anything other than hold my little S-triple Qs. All right, let's keep looking here. So it looks like an Nvidia one. So, defendant left wrote, do you want to make some fast money? Put together a thesis as to why Nvidia is oversold. We can destroy it. Just read the analyst notes from this past quarter and assemble the best ideas. I wonder where he wrote that. It says, in an electronic communication with individual C, a portfolio manager. Okay. This is like the coordination, right? Later that morning, opened a long position on Nvidia, including short-dated calls that expired 3 days later. He then promoted it on Twitter, stating Citron buys Nvidia. This is the first time in 2 years the stock offers an appealing risk-reward. Wait. Do you want to make some fast money? Put together a thesis on why it's oversold. Oh, okay. We see 165 before 120. At the time, they was trading for 144. Despite his representation that he expected Nvidia shares to rise to 165 less than 2 hours after announcing, defendant left sold 100% of his pre-tweet position. Interesting. So he basically went with very short. That's interesting. So, like, I don't like this Andrew Left guy at all. But he didn't say here, like, I don't know if I agree here, because, and tell me what you all think. He didn't say that he was going to go long for that entire period of time. Tesla bouncing at 216, nice. Right? I mean, am I wrong about that? Like, right here, it says, all he says is there's an appealing risk reward to investors. We see 165 before 120. And I mean, he had a 3-day call option. But nowhere does he say here, like the other one he said, oh, we're long the quarter, right? Over here, it doesn't say that he's going long the quarter. So it could be totally true. Yeah, he did bag on Enphase, which that was criminal. I agree. I think what they're alleging here, the allegation, right? Here, he doesn't say he's going long for the quarter like previously, but he's the prosecutors are trying to show he's using his tweet as a way to profit. Because technically, I don't see anything inherently wrong with having a call option and being bullish in the short term. I think they're just trying to argue this was him manipulating. Okay, I don't. Let's see the Twitter one here. What is this? Defendant left held approximately 145 share short position on Twitter stock. Let's see here. Okay. Highlight that. Defendant left bought short-dated positions that expired on the 21st, so the next day. So these expired the next day. Prior to publishing a tweet, defendant left entered limit orders to sell his put options. But that's limit orders or stop limit orders? Stop limits would be okay. And normal. You know, but they don't specify stops. But they don't say stops here. So I think that would be an important distinction. Because if somebody puts in a stop, that's entirely normal. At approximately 9:52, defendant left posted on Citron Twitter account with the link to a Citron report about Twitter. Twitter has become the Harvey Weinstein of social media. Price target $20, can't be ignored. At the time of the tweet, Twitter stock was... Okay, Twitter has become the Harvey Weinstein price target of $20. Okay, at the time of the tweet, Twitter was $31. Within 1 day of trading... Well, yeah, he closed 100%. Well, it was a 1-day option of a short position with a trading range with a profit of $2 million. Yeah, they're just alleging manipulation here, but this isn't, like, I want to see the hedge fund coordination, right? I feel like I want blood. Made some money back today on the short side. 2 million Twitter trade. Gives power for long, not bad. Huge effing day. Every news outlet is calling me. Love the title, Harvey Weinstein of social media. Okay. During the same conversation, the defendant discussed being a tweet away from meeting Citron's end-of-the-year target of $21 million. See, that's how he's screwed here. He knows he can manipulate the market, and that's the dirty thing. That's interesting. I love that quote. Andrew, nothing left. Yeah, let's see what he does about GME. GameStop. GameStop's not in here. Wow, what about AMC? Nope. Interesting. Okay. Defendants, I want to see the coordination. Okay, here. Concealed as coordination. Okay, here we go. So this is a coordination one. General Electric. Let's give this one a shot. Let's see what this is. Okay, so on August 16th, defendant left initiated a media campaign to discredit another activist short seller's short report on GE and artificially inflate the price of GE stock to benefit defendant's left trading position. On August 16th at approximately 8:12, the defendant placed a limit order to buy shares of GE at $8, which was filled at $8.34, which was filled. Then he placed a limit order to sell the same shares if the stock price increased to $8.63. Yeah, that's fair, right? That's a take profit order, right? So that's okay. Like, you're allowed to make a trade and taste. Nothing inherently wrong with this, but that's a take profit order. At approximately 10:44, he posted to Twitter, Marco Polo's report on GE was the worst that activist short selling has to offer. Aggressive accounting is not fraud. Disingenuous all the way through. The post included a link that directed viewers to Citron's own GE report. Defendant left made false and misleading representations in the Citron GE report to manipulate the price. Okay, specifically, the defendant represented that Citron took the opportunity to buy the stock as well. In truth, he had already placed the order to sell his shares. No, that doesn't work that way. No, that's weak. Like, I want to see juice here. Like, I'm all for. You know, throw the bad man in jail. You know, I hate it. Like, he burned me so many times on some of these, like this stuff. You know, like the short report on Enphase or whatever. Although I did buy a little bit of it. This is not. I don't. Putting a take profit order in is not disingenuous. No. Like, again, I want to see, like, go for it, you know, go for it. But no. Took the opportunity to buy the stock as well. He did. That's true. He did buy the stock. A take profit order doesn't imply he didn't. Ah, man. Again, like, I'm purposely looking at this. I'm not here to defend this guy. I don't like this guy. But this is just a bad complaint, and it makes the prosecutors look like they don't understand stocks. Within approximately 1 hour of posting the tweet, defendant sold all of his shares for a profit of $70,000. He also emailed commentary to the news members in an effort to fraudulently boost their credibility by promoting false pretense that the defendant was independent and free from financial conflicts of interest. That would be wrong if it's not true. Commentary stated, Markowitz is being paid a percentage of profits from an unnamed hedge fund that is short GE. Okay. Where no credible hedge fund or short seller would ever do this. In 18 years of publishing, we have never been compensated by a third party to publish research. Okay, if that's untrue, then that's scummy. Using full disclosure, short sellers. Okay. Okay. Unfortunately, what we just missed. In reality, defendant. See, that's scummy. In reality, Left had in fact been compensated by unnamed hedge funds that held short positions in securities targeted in Citron's research, and Citron had no internal compliance limiting Left's collaboration. See, that's bad. See, that is a lie, and that's wrong. This is a strong argument from prosecutors, right? So I find this very entertainment because I think that's a strong argument. This is a weak argument. Indeed, defendant had received more than $1 million from hedge fund A. Defendant Left received more than $1 million. Defendant concealed his coordination for compensation from their followers, members of the media, regulators, and law enforcement. That's fraudulent. Strong fraud argument. That's very interesting. Okay. Namaste Technologies. Company... Honor about in exchange for defendant Left's dissemination of negative information. Hedge fund agreed to pay defendant Left a portion of profits from shorting. This must be disclosed. Fraud if not. This is probably a strong argument. Drop it like it's hot. Interview. Left discussed negative tweets and falsely stated, I'm going to keep shorting it until it goes to zero. See, you can't say that and then not do it. Notwithstanding this representation, the next day, should we cover all or keep some? We should cover a bunch. That's fraud. That's a slam dunk. That's a strong fraud argument right now. That's a good one. You said you'd short it to zero. You must do what you say in securities. You know, that's my opinion, right? Okay. Totally agree with this. That's a strong argument. Okay. Citron proves, without a doubt, the fraud being committed at Namaste. This is a $700 million company and will be zero if regulators read. Yeah, and then it sounds like they exited is basically what they're arguing here. Correction. Okay. Defendant left directed hedge fund A to send defendant left shares of trading profits through a third-party intermediary to conceal true beneficiary and purpose payments. False invoices. What is this? Specifically at the defendant left's direction, individual F provided hedge fund A with false invoices. Upon receipt of payment of false invoices by hedge fund A, individual F sent wire transfers. Okay, this is a way of basically showing, you know, that they got the inside information, basically, right? This is very interesting. Okay, that's pretty good. When you check with other hedge funds that specialize in the industry, you're looking at, is there compensation between the two of you? The defendant left falsely stated that there was never compensation between him and hedge funds. That's fraud. Strong, that's a strong fraud argument. I want to see more of the trade ones. Scheme to defraud. Oh, let's see Roku. What did he do with Roku? Let's see. Let's do one more here. Roku. Okay, let's see this one. All right. So this is... Okay. Defendant left open short positions in Roku, including short-dated put options that expired 3 trading days later. Defendant left posted the Citron account that Roku was uninvestable. Roku was uninvestable. At the time, Roku stock was trading at $41. Within 2 minutes, defendant placed orders to exit a position. Again, they're trying to prove manipulation here. Following tweets. Oh, by the way, look at the Qs. Qs are rising. And Tesla... Oh, Tesla's consolidating at about 215 now. Interesting. It's right there at about 217, between 217 and 215. Bitcoin lost about $700 there. Somebody says, oh, Qs are running. Okay, well, let's try run. Is Sunrun running? Not really. No, Ubiquity. Again, I'm long exposed to Ubiquity, and I like this one a lot. If you really want to study Ubiquity, we talk about it in the course member live streams, but if you study Nvidia Ubiquity, look at their balance sheet and cash flows, their inventory buildup, and how they don't have to build up inventory anymore. I like that one a lot. IWM, Qs are recovering nicely here. So I might get an opportunity to build my short position on that. Did your 80K Bitcoin stance change? If we sell off next week following the Fed, yes. A Bitcoin will go down first. And that's because after July 11, July 12, the market just started, like, pooping itself. Now, I'm 4.5 on my 1 to 10 on the bear bull scale, so I'm more bearish than I am bullish right now. Although my net short position is not that big. It's relatively small right now. I want to DCA into it. Mostly because I don't think we're going to drop off a cliff. It'll be a slow move down. Roku was uninvestable. Within 2 minutes of posting the tweet, defendant placed orders to exit the position. Placed a limit order to exit his short position at 40.87. 1 hour, 20 minutes after tweet. Exited the entire tweet position. One of these days, you'll see the light on Roku. I mean, some of this is just trading. Okay, to clarify, hold on. What is this? This is defendant left deleted an earlier tweet on Roku from Citron Twitter account and falsely and misleadingly posted, to clarify, we are watching Roku from the side, when in fact the defendant made $700K in profits from his manipulative statement in trading Roku that morning. Well, his defense here, at the time of the original tweet, we were in, and now we're not. Also true. But he's trying to clarify the morning part. And again, they're going for manipulation. And they're showing that he's defrauded before. Those are good arguments. Okay, let's do another one. Facebook. Defendant left opened a long position in Facebook of 20,000 shares and, cross trading. You got shares and options that expired in 2 days. My God. Okay, 9:52, defendant left posted on Citron Twitter account with a link to a Citron report. Facebook backing up the slay. 160 target. Presents only information that counts on FB looking past the rhetoric. Would you rather have your kids addicted to nicotine or Instagram? Wall Street's answer will amaze you. At the time of the tweet, they were trading for 129. To cause a temporary and artificial increase in the stock price by which they could profit, defendant left publicly stated in the Citron report that 2019 S&P stock of the year. Okay, I mean, so far, if they believe that long term, that's okay. Like, does he keep his shares, right? That's going to be the interesting one. In a private communication, defendant left explained his strategy to artificial... See, that's bad. As crazy it sounds when I put out reports and big names like this in the middle of the day, what I'm really doing is switching algorithms. Oh, okay. See, that's fraudulent. That's a slam dunk fraud right there. Oh, this guy, this isn't looking good for this guy. That's slam dunk fraud. Okay. Slam dunk fraud. See, the way they're doing it is they're showing, here's what he's doing, here's the fraud. And because this alone isn't necessarily bad. This is the fraud, because you're trying to prove you're manipulating the market. And he's saying like, oh yeah, I manipulate the market. Dumb to do that. Within 6 hours, promoting his long position, defendant left sold the equivalent of the shares. Oh, he sold 89% of his pre-tweet position. Within how long? Within 6 hours. So he sold the shares too. Well, sold the equivalent of. He had... This is really interesting. 340,000 shares and 20,000 shares of the stock. Oh. So, but he may have still kept the long shares, right? So he probably just closed the option. Let's write that down. Prob the option. Oh, there it is. Within 48 hours, defendant sold 100%. Oh, yeah, I mean, that's messed up. You know what, like... What changed in 48 hours? You know, like stuff could change over weeks, but to sell your shares in 48 hours, that's crazy. Oh, Q's just dropped again a little bit. Oh, Nvidia just tanked. Damn it. Oh, wow. Tesla's now down 2%. Oh, wow. Okay. Oh, wow. Yeah, okay. Oh, okay. Now Bitcoin's going bearish. Oh, dear. Here we go. That's interesting. Okay. Oh, wow. BTC's tanking now. Ooh. Ooh. Interesting. Very interesting. Let's see here. Okay. This is becoming a trend today. 160 line again. Okay. I'm going to go more short. And I'm going to buy this for... I'm going to give myself some time. Okay, I'm going to... I don't generally like chasing, but I'm going to go smaller and DCA into a position for August 16th. I'm not going to hold it that long. But the trend today is going bearish. So this is really interesting. Because every pop, we get rejected. So far. We'll see. We'll see. I don't know. Could be wrong. Okay, we'll watch it. I don't like the BTC signal. We'll watch what happens there. Okay. Let's go here. Okay, so we did Roku. Let's do another one. We did Twitter. We did Nvidia. This is a very interesting case. The Tesla one. CNBC. Cron we looked at. That was the cannabis. To draw attention of the news-based trading and algorithms to alarm investors, a left included sensationalized and inflammatory language in the Citron reports. You know how many times they've done this? Like, I remember seeing these short reports and they called Enphase a fraud. Dude, Enphase went down to like $30. And I'm like, no. Yeah. Ay, ay, ay. I want more examples. Cron. I think we've gone through all the examples. Cron, Tesla, Nvidia, Twitter, Facebook, Roku, Beyond. Began to build a short position just prior when they published a tweet on Beyond. Defendant left, held a net short position of 496,000 shares, including were put options he purchased, which expired the same day. Dude, same days. No. Just prior to the publication, it was trading at $88. Defendant tweeted, Beyond has become beyond stupid. Most heavily traded retail stock on Robinhood. Market cap now bigger than the industry. We would expect Beyond to go back to 65 on retail exhaustion. With approximately 3 minutes, they began closing their positions. Oh, yeah. Yeah, he's... that's bad. It's just bad. That looks really bad. Defendant left had reduced net short exposure, approximately 98% reduction by 2 p.m. within 12 minutes. 13-ish minutes. 12 to 13 minutes. 12 to 13 minutes to get out. And then let's see what if they catch him in a fraud right here. Because that's manipulative. Let's see if this is fraud. Defendant left wrote back to CNBC. Yes, I shorted some today. Seems to be all retail driven without fundamentals. It's materially misleading because he had covered nearly his entire short by this time. I mean, this is true. He did short some here. It's just, I think it's sort of like being intentionally vague. It's a little weak, you know. This is a little weaker argument. He did short some today. Then he purchased additional short options, learning that CNBC would be publishing an article concerning Beyond. On or about the next morning, he had completely closed his entire position. Okay, American Airlines. Defendant left open to short position. In addition to his equity short positions, between approximately 11:48 and 49, defendant left purchased short-dated options in the left trading account that expired the same day. It's trading at $20. Defendant left posted AA Bell back to $10. Robinhood traders have zero idea what's coming. Balance sheet is upside down. The reason why Buffett fully exited. They don't teach finance in Sherwood Forest. Okay. Within 10 minutes of posting the tweet, defendant exited the short positions. Okay. Then, defendant left posted a second tweet. To clarify previous tweet, the 25K new users on Robinhood who bought stock at $19 must know more about airlines than Buffett at 11. Send your resumes to Omaha. Expect the stock to trade back to 10. Okay. Defendant then completely closed his pre-trade account trades. It's again building up that he trades off his Twitter posts, basically, right? Building up that he trades off his Twitter posts. That's interesting. All right. So what else here? This is Andrew left. Palantir. All right, let's do one more here, and then we'll go do another check of the markets here. Andrew left. It was the Citron Research guy. Just got charged with all this stuff. Okay, so let's see here. Defendant left open short positions in Palantir in the left trading account that would generate a profit if Palantir's stock price declined, right? Defendant left purchased short-dated put options that expired the same day. Defendant left posted on the Citron account, what a run the past month for all, but as traders looking for short exposure, Palantir is no longer a stock but a full casino. Does not take a ball of crystal to know this will fall back. Shorting with a $20 2020 target. At the time, it was trading for $31. 8 minutes later, defendant began closing his positions. Yeah. Wow. Okay. He's got a lot. He's got a lot to defend over here. XL. Why do I remember XL? Four minutes before posting a tweet promoting, place the limit order to sell a shares if it rose. Take profit. I do not think take profit take profit isn't manipulative. They need to argue the only reason. Basically, prosecutors need to prove the following. This is going to be my take on this. Let's go with. I just need an open space here. Okay. My take. Number one, saying you're not compensated by hedge funds and you are is fraud. Right? That's pretty strong. So that's a strong case against him. Two, strong argument. Saying you're in a position for the quarter and you're out entirely without any catalyst change is fraud. Three, having, this is going to be the weak argument. Weak. Having an opinion, stating it, and trading short-term options around it, that in itself is not a strong argument. I would call that I would call that the weakest prosecutor argument. However, number 3 is enhanced by Andrew Left saying that he knows the market reacts to what he says. See, I think the opposite, personally. Like, I think when I say something, like, the opposite happens. It's like, I'm going to short the Qs skyrocket. But this guy, he had a really big Twitter following that actually moved markets. His Twitter account, the Citron Research, they moved markets. Everyone knew that. He knew that. And so that enhances argument number 3. This makes argument number 3 much more powerful. Very, very interesting. Yeah, that's the way it is with me too. I know, right? Like, I feel like when I open a position, the opposite happens the first candlesticks thereafter. And then I just like, it's like, I'm going to diamond hand then. Very, very interesting. All right. That's good enough on Andrew Left right now. I thought that was entertaining. Hopefully you thought that was entertaining too. Oh, come on. Oh. What's happening? Oh, come on. Oh, that's so dumb. I hit save and it deleted like half my box there. Dude, Adobe sucks. What a scam. I hate Adobe so much. I feel like I want to uninstall the stuff and cancel my subscription. It's so dumb. All right, what do we got here? Nvidia. Oh, wow. Yeah, it's down here at like in the 112s now. This is one. So oh my God, as we're watching it. Nvidia's about to lose the lead. Like, I'm getting ready to push the button.
Lost the lead.
Okay. Wow. Wow, that's crazy. Okay. Kevin is short Adobe. I'm not short Adobe. Oh, look, gained the lead again. Tesla, Bitcoin, Enphase. Oh, Enphase gave up the 121 run. Yeah, 119's a hard one to escape. Oh, look at that. You get a little bit of a rally here. Oh, I hear children screaming. Whoa, Open Door lost all its 4%. I'm telling you, these small caps, be careful. I closed all my exposure to the Russell 2000. I do have exposure though. I don't think Embraer is considered a small cap. Ubiquity, I think, is the smallest exposure I have, or the smallest company. I'm not sure about that. To double check. But Ubiquity, I really like. Like Ubiquity, I kind of hope it sells off because I want to buy more of it. Their products are so good. Like, we're rebuilding our. I posted on Instagram a couple days ago, like a picture or a video of our Ubiquity server rack. We're just starting to sort of rebuild this stuff. Let me see. I think I get. Do I have the story? Oh, it's in Instagram. I could probably show it. That's kind of cool. But we love their products, and we keep buying their stuff. I think I gotta go to like archive, right? Archive. Yeah. This looks so good. Here, I'll pull it up. One sec. I gotta plug this thing in. Okay. All right. Oh, yeah, and that reminds me, we're hiring still. See, I posted this. We're hiring architect. We've got some pretty good applications now for a licensed architect who wants to work in person. Got some good applications for a licensed structural engineer, like a PE. Now what we need is a licensed contractor. So if you want to be a licensed contractor and get a sweet, sexy, delicious salary and in-person work and potentially stock comp and all that kind of stuff, hit us up at jobs@meetkevin.com. Just send your resume and like a 60-second pitch video to jobs@meetkevin.com. Anyway, this was the rack that I wrote. It's starting to look sexy. This is all the ubiquity stuff. Like those are our hard drives, our switches and stuff. So it's like, I'm jazzed about their products. Which Insta account? So I only have one. It's at it's at Meet Kevin. Like yesterday, I showed Summer getting a bath. You want to see her? Look at this cutie. Look at her. Summer. It's so cool. Love these little kids. Look at Ella. She's our biggest. All right. All right. What else here? Do you use their security camera stuff? Heck yeah. All right. Let's see what else is going on here. So, stop paying attention for a moment. This gets like no volume. Oh, Nvidia. It's back here. 47 on the Qs. So the Qs are stuck at this 460 level. Look at this nasty barcoding. Okay. A little bit of a run here on Nvidia. Enphase trying to break 119. Bitcoin gave up some of its bearishness. ARM. Dang it. It was up 4%. I'm like, man, I kind of want to go short ARM. And now it's down 1%. It's a 5% swing. Interesting move on IWM. Up, then down, and now coming down more. Yeah. All right, let's listen in over here.
Basketball, getting to Lille, France, which is where the basketball is taking place, requires the trains. That's delayed. We're going to see how quickly they're able to get those up and running. I don't know if you can see it, but there's now probably more than a dozen snipers on the top there of the Arc de Triomphe. The streets here have been officially now shut for the past hour and a half, and they will continue to be this way through the closing, or I should say through the opening ceremony this evening, which of course is running along the Seine River, 4 miles long, something like 7,000 athletes crossing 24 bridges, and this has never been done outside of an Olympic stadium, of course. So we are all on high alert right now.
Are there more business leaders than usual? I mean, you go to the Olympics every time, Andrew.
Yep.
It feels like they're all there.
There's no question. I think part of it is post-pandemic. You know, you think about the last Olympics in Tokyo, and also, some of the other Olympics. I'm thinking of Pyeongchang and other places, harder to get to, more difficult. What could be better than the Olympics in Paris in the summer? And so there's no question. This has become almost, for the world of business, almost the Davos of sporting events, if you will, given all of the folks who have come here, in part to entertain clients and other things. There's meetings going on all around the city. Everybody desperate to get the right sticker for their car, in part because these streets are shut down. But absolutely, it is. It's Moneyball here at the Olympics this year.
Yes. Well, enjoy it, Andrew. We'll be watching on TV. It's very exciting. Andrew Ross Sorkin, thank you from Paris. Norfolk Southern shares, they're rallying near the top of the market. The company reporting revenue growth for the first time in 5 quarters, thanks to rising merchandise and intermodal volumes. Shares also moving higher on reiterated guidance for its operating ratio. Our Morgan Brennan, who covers the sector, joins us here at Post 9 with Norfolk's CEO. Morgan, over to you.
Hi, good morning. Yeah, shares are up 10.5% right now. Alan Shaw, CEO of Norfolk Southern, joining us fresh off of earnings last night. Great to have you. It does seem like the headline here, you're getting more efficient despite derailment settlement, despite shareholder fight, and that full-year operating ratio, which is a key metric for the industry. The fact that you reaffirmed it, a lot of investors going into this print didn't think that was going to be the case. It is. What gives you confidence?
Look, we're doing exactly what we said we were going to do, Morgan. We laid out
aggressive targets for the year, and despite a weak freight environment, we've overcome that with accelerating our productivity initiatives. And at the same time, we're offering a great service product, and we're growing in our most service-sensitive markets, intermodal and automotive. And so we're growing, and we're driving productivity, and that gives us a lot of confidence to reaffirm our margin guidance for the second half of the year, which is effectively a 400 to 500 basis point improvement in OR year over year.
It's interesting to hear you say that you're growing intermodal and auto. Auto, I mean, the car makers had a very rough week with earnings. We know what's happening in that industry right now. Intermodal ties back to what we saw with GDP yesterday and the buildup in inventory, but these are very economically sensitive areas of goods that you transport. How are you able to grow them right now?
Service. And that's the essence of our strategy. We're improving service, we're reducing costs, we're growing revenue, and we're enhancing safety. And we said we were going to use service as an enduring competitive strength. And we got a franchise that's built for growth. And so we're growing in our most service-sensitive markets. Our intermodal volumes grew 8%, automotive grew 7%. And we got a lot of confidence going forward. Customers see our improvements.
Okay, so cost cuts, improving efficiency. You're also continuing to work on improving safety as well. We got this settlement tied to East Palestine derailment in the last couple of months. We've also seen the investigation report details from regulators too. Can you confidently say that the worst of that situation is behind us?
You know, there is ongoing litigation.
Boring. All right. IWM still rotating down. It's at 90 basis points. I'm trying to see what a big mover is here. Consolidate. There's not a lot of momentum today. My take. Thoughts on Intel and AMD? Yeah, Intel. I got a little bit of exposure to Intel. I'm not the most jazzed there. It's gonna take them so long to get these factories up. I was really disappointed by that. Wow, AMD's bleeding too, under 140 now. Look at that, triple reject right there. Yeah. I mean, I've been short Nvidia twice today. I had a short first thing in the morning that I closed out, and I reopened on it. So Nvidia is an interesting short as a trade, I think. And IWM, part of me thinks that if I go 236, like if IWM actually runs to 236, maybe I go short here. Because I think if we do have, like, I think the shorts will be very cheap at that point. And if we do have a collapse in the stock market, you know, if we get really bad news next week or whatever, and we get a collapse in the market next week or thereafter going into the election, IWM will get absolutely smoked like dynamite. Just blowing up in your face. So BTC is consolidating. Yeah, just not the most momentum today. So I might hold some positions. Well, I'm going to hold some positions, but I'm going to hold some shorts going into next week. Google's doing nothing. Very low momentum. Unless you get a sell-off at the end of the day. That would be entertaining. Toast 3, First Solar 5. The number of people easily finding jobs has been declining over the last year. Oh, for sure. For sure. I think, yeah, I think it has gotten a lot harder, especially people in finance, it seems like, to get jobs. Yeah, there's some videos on how I picked the strike price. But, yeah, biggest thing now is, oh, I gotta get to the course member live. Hit us up at jobs@meetkevin.com. And, yeah, looking for a licensed contractor to hang our, to license house hack. And, we're gonna do some pretty sick stuff. It's gonna be really cool. All right. What else? Anything else? I don't know. It's pretty quiet right now. I mean, IWM's giving up. Nvidia's pretty stable, and so's Tesla in this area right here. So, all right, maybe we'll do a few more questions and then let's go. Scroll up here for a minute. Love the daily streams. Have paid for your courses several times over. Love to see you add ASTS to your watch list. Well, thanks for saying that. AST. Ooh, Bitcoin popping a little bit here. Oh, look at that. So is Nvidia, and so are the Qs. Ooh, rally. Here comes the rally. Everything's going to the moon. Okay, what'd you ASTS? AST space. What is this? $5 billion company. $5 billion company for Space Mobile? The heck? All right, let me look at this. ASTS. This is a telecommunication company. Offers space-based broadband cellular network for mobile phones. Oh my gosh. Financial. Well, it's not a surprise they're losing money. They don't really have revenue. $12 million of revenue in 2024. Oh, but they're forecast to have a lot of revenue. Wow, they're forecast to see their revenue explode. No way. 2028 forecast of $8 of EPS? Are you kidding me? It's an $18 stock. Let's go do an analysis in the course member live stream. They have contracts with big telecom carriers. I see. Yeah, that would make sense. Oh, things are moving up right now. That's not good for my shorts. Yeah, look at the 160 bounce. That's alright. I will add to them. Alright. Whatever. So, not much movement though, huh? Let's see. Deckers, CleanSpark, First Solar, Ryanair, Coinbase, Toast, ASML. Yeah, here's our page of red. We expected we'd see a page of red. But barely. Barely a page of red. Barely! And if you take out the short ETFs, I don't even think you are a full page of red. So... fake pump. It's all going down into the close. Just remember this. Look at yesterday's fall into the close. Look at that volume explosion here. Wonder if we'll see that happen again. Straight down. And then I think we had that the day before it too. Oh no, not as badly. Alright, I gotta go. Thanks for hanging out. We'll go get some more coffee. See y'all. Oh, I gotta push the button. Even though I'm a licensed financial advisor, real estate broker, and becoming a stockbroker, this video is neither personalized financial advice nor real estate advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show should not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purpose of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services which we may benefit from. I personally operate and actively manage ETF and hold long positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuers other than HouseHack, nor am I presently acting as a market maker. Boom, baby, boom! All right, folks. See you in the next one. Goodbye.